CMU is responsible for many different functions. In this presentation, we will talk about 4 of them. First, we will cover the daily cash position calculation, which includes how we manage sweeps and how we manage the funding of sole custody bank accounts. We will go over banking services and banking administration, including the process for establishing new bank accounts and our security administration duties such as bank website user requests and bank website user password resets. We will also cover the New York State Enterprise Project for the Banking Consolidation Initiative. This includes our initiative to reduce the number of bank accounts and to streamline banking processes. And lastly, we will review cash advances. We will provide helpful queries and transaction information, as well as some guidance on when using a cash advance account is appropriate. First, we will go over the management of New York State monies. The Comptroller is authorized by State Finance Law, Section 98A, to invest any money in any fund not needed for payments. In order to do this, CMU must calculate the New York State cash position on a daily basis by 10 a.m. each morning. The 10 a.m. deadline is built in so that the investments unit has the appropriate amount of time to go out into the market and find appropriate profitable investments. The cash position calculation is built to tell us any excess cash balances, or lack thereof, in the New York State General Checking Account after all payments have been made on any given day. Any excess cash determined after the calculated cash position will be invested in the short-term investment pool per State Finance Law, Section 98A. The cash position consists of many closely monitored steps executed by the CMU team working together. Each day, CMU staff monitor the balances in various agency sole custody accounts and either sweep cash into the New York State General Checking Account or, if necessary, sends cash out to the agency sole custody accounts to bring the balance positive. Sole custody accounts cannot be funded with cash if the fund cash balance in SFS is not sufficient to cover it. CMU also monitors any large receipts into the New York State General Checking Account. There is limited transparency on receipts to be received. CMU relies solely on the agencies to provide advance notice of any large receipts. We only know about receipts that we are told about. We also monitor payments out of the New York State General Checking Account. This includes any 2-day ACH payments generated through the normal SFS process, payroll, and any ad hoc wires that are needed for prompt payment. After the establishment of the cash position, any excess funds will be invested into the short-term investment pool, or what we like to call STIP. Any monies earned in the STIP will be distributed on a monthly basis to the various eligible funds. This slide represents a visual of what the cash position calculation is based on. As discussed in the previous slide and represented in blue on this slide, the general checking account takes in cash from various sources. A large portion of the cash is from federal grant reimbursements and sole custody account sweeps generated by CMU. As represented by this picture, this cash goes into the general checking account and is invested in STIP for any excess cash over payments out, which are represented in red on this slide. A large portion of cash out includes payroll, local assistance, and other vendor disbursements and agency payments. The end goal for CMU on any given day is to have the balance in the general checking account be equal to $0, with the hope that all excess money has made its way into the STIP to be invested. CMU works with the investments unit to have money mature from the STIP on days where large payments will be made, so that cash is available in the general checking account when needed. As mentioned before, CMU relies heavily on agencies to provide notice for large receipts and disbursements. This allows CMU to better manage the state's cash and investments. So what can be done to help? Agencies can email cashmanagement@osc.ny.gov to notify us of large unexpected deposits and payments, as well as the associated dates of these items. Any sole custody account funding or sweep requests must be made by 10 a.m. on the day this is expected to be processed. If requests are received after 10 a.m., they will not be processed until the following business day.
In addition to the daily cash position, the cash management unit also has some banking administration responsibilities. We are responsible for authorizing the establishment of new bank accounts, and for certain bank accounts, we also serve as the administrator, so we grant and manage online access for those accounts. To open a new bank account, an agency must send a request in writing to cash management, and we'll review the request to determine if it's consistent with applicable regulations and if the account is necessary for operations. The request should include certain information about the new account, such as the name, the purpose, and a justification for the account's establishment. At the bottom of the slide, we've included a path to a section of the Guide to Financial Operations, which contains a comprehensive list of all the information your request should include. If the request is approved, we'll contact the bank and give them the new account name and agency contact information, and the bank will work directly with the agency to set up the account. I want to emphasize that all state bank accounts should be for official state business only. Agency employees should never have bank accounts for things like coffee funds, party funds for the office, etc. As an additional note, if your agency has a bank account that is no longer needed, it should be closed, and you should be letting us know about that. Cash management maintains an inventory of state bank accounts, so it's important to let us know about any new accounts or closed accounts so that we can keep that list updated. As I mentioned earlier, we are also the administrator for a number of state bank accounts. Our banking services mailbox is included here on this slide, so you can contact us at that email address if you need a password reset or if you want a user to be granted access to a certain account. When you send us an email to add a new user to an account, at the minimum, you should include the employee's name, contact information, and what bank and accounts the user needs access to. It's also helpful if you can provide the name of another employee who has the access you were requesting so that we can clone their permissions. You should notify us not only when a new user needs to be set up, but also when a user has left the agency. We want to know when employees leave so that we can remove their access. Most banking services must be approved by OSC. There are a few exceptions, things such as deposit slips and electronic access to monthly statements. However, if you're interested in adding some other banking service, you should reach out to us. On this slide, we've included a list of some of the common requests we receive for online access. If you're not sure what a service is, or if there's even a service available to fulfill a particular need your agency has, again, we encourage you to reach out to us. We can provide current information about the various types of services banks provide and give you more information. Today, we also wanted to tell you a little bit more about one of our current ongoing projects, which is banking modernization and consolidation. The project has two main goals. Simply put, the first is to reduce the number of state bank accounts, and the second is to improve our banking processes to make them more efficient and cost-effective. Going forward, one of our objectives is to reduce the number of state bank accounts, and in particular, we'll be focusing on administratively created sole custody bank accounts. To start out and give you an idea of the scale, OSC currently assists in managing over 2,000 agency bank accounts within over 60 banks for various state agencies. Of those 2,000 plus accounts, over 1,300 are sole custody bank accounts. And when we say sole custody account, we mean bank accounts held outside the state treasury, you may have heard this being referred to as general checking, in the sole custody of a state official. Throughout the years, of course, sole custody bank accounts have been open for various reasons. There are a number of sole custody accounts that have been established pursuant to law or are mandated by law. That is to say, we can point to a specific section of state finance law or some other statutory language which authorizes the establishment of that account. However, there are a number of sole custody bank accounts which have been administratively created over the years. That is to say, they are not required by law. They were created in the course of business, maybe even for reasons that are not necessarily applicable anymore. Going forward, we want to look more carefully at these types of administratively created sole custody bank accounts and the role they serve today. For example, do you deposit money in one bank account and then immediately transfer it to some other account from which it then gets transferred to general checking? In other words, do you have accounts at your agency serving as some type of pass-through account? And if so, are these accounts necessary in your business process? Do you have any accounts that remain open but have been inactive for a period of time? And if so, can these accounts now be closed? Closing unneeded bank accounts will have several benefits. Obviously, fewer bank accounts means lower banking fees and costs and reduces the opportunity for instances of fraud. However, fewer bank accounts also decreases the administrative burden on agencies. Agencies are required to reconcile their sole custody accounts on a monthly basis, so one less account means one less bank reconciliation that you will be responsible for. Fewer bank accounts also means fewer filings to tax and finance, and also annual sole custody filings. So there are a lot of benefits to closing any unneeded bank accounts. Another objective of this project is to implement process improvements to make state banking more efficient and cost-effective. For example, in recent years, we've been helping to set up more agencies with online bank statements and reduce the number of paper bank statements being mailed each month, and this has been a cost-saving measure for the state. We've also moved agencies to more efficient banking products. For example, by having agencies which receive high volumes of checks use remote deposit, rather than having an employee or courier take the checks to the bank. Going forward, one of the eventual goals of this project is also to migrate more sole custody accounts into SFS so that the accounting can be managed there. We are also considering the possibility that some deposits could be made directly into general checking, rather than going to a sole custody account. That's just a broad overview of our objectives for this project. Obviously, every agency is unique, so throughout this process we'll need input and feedback from you to better understand your accounting needs and internal business processes.
Next, we will go over cash advance. Section 115 of the State Finance Law authorizes the establishment of cash advance accounts. Cash advance accounts are generally established for petty cash, travel expenses, confidential payments, special payments, or professional services. Advance account funds are established from appropriated funds, and these funds should never be commingled with any other monies. In an effort to limit the number of bank accounts, agencies are required to account for all cash advances in one consolidated bank account. The account should be in the name of the agency, titled Agency Advance Account. Any new bank account for cash advance must be justified with a written request submitted by the agency's Chief Fiscal Officer to cashadvance@osc.ny.gov. A separate vendor ID is required for each account. The guidelines for cash advances can also be found in the GFO. Advance accounts are operated on a replenishment basis. If $50 is spent from an advance account that is appropriated $100, making the balance $50, a voucher will be entered into SFS against the proper expenditure account code, and the advance account will be reimbursed with that exact amount, making the balance $100 once again. The account should always maintain the appropriated cash balance. Additionally, all advance account disbursements should have proper documentation attached to the voucher. There are two types of cash advance transactions that are done in SFS via an accounts payable voucher. The first type is a transaction to increase or decrease the cash advance authorized limit or the total amount in the associated bank account. These are done using specific account codes 59001 through 59005, or in the case of a lapse appropriation, 32209 through 32213. Each is associated with a separate type of advance account. If these account codes are submitted on a voucher meant to replenish a cash advance account, the voucher will be denied. The NY_AP_CASHADV_authorized_limit query, shown on the screen, shows the total AP vouchers by vendor ID charged to mentioned cash advance account codes. This can be run to show the total authorized limit out there for any cash advance account. The total in this query by vendor ID should match the total in the related cash advance bank account. The second type of transaction is a replenishment transaction. Non-personal service account codes should be used on all replenishment vouchers. This will essentially reimburse the cash advance bank account with any appropriate, allowable, and documented state expenditures. These are required at least once a month. It is not appropriate to use the advanced account codes 59001 through 59005 on a cash advance reimbursement voucher because that would incorrectly increase the accounts receivable balance in the modified accrual ledger. Replenishment vouchers charged to the advance account codes will be denied by us and state expenditures. The NY_AP_CASHADV_replenishment query, also shown on the screen, allows agencies to view their reimbursement voucher activity by vendor ID. State Finance Law Section 107 requires cash advance accounts to be reconciled monthly. This aids in fraud reduction as well as a timely annual completion of the annual confirmation. State agencies are required to reconcile and confirm outstanding cash advance balances each year as of March 31st. In April, agencies must run the public query NY_AP_CASH ADV_authorized_limit mentioned in the previous slide to obtain a complete list of OSC approved advance accounts and other information needed to properly complete the annual confirmation for each bank account. Any cash shortages are the responsibility of the custodian in charge of the advance and must be reported to OSC immediately. All shortages, explainable or not, should be corrected by submitting an AP voucher for reimbursement to bring the account in balance. Along with the CMU initiative to close down bank accounts, OSC is actively requiring that agencies reduce their advances where they are able. This includes utilizing P-cards, T-cards, and employee expense reports where applicable, reviewing appropriate funding levels for advances that are still needed and reduce the advance to the necessary amount, and returning advance funds and closing bank accounts when there has been no activity within the past year. For daily inflows and outflows and to request sweeps or transfers between bank accounts, you can email cashmanagement@osc.ny.gov. For bank account questions, including security requests and access to certain reports or services, email bankingservices@osc.ny.gov. For cash advance account questions, email cashadvance@osc.ny.gov. Please make note and record, if you would like, the following helpful GFO resources for establishment and closing of bank accounts, bank account reporting and reconciliations, banking services contracts, and all information related to cash advances.
So that is the end of our presentation. Does anybody have any questions? I only see one about courier services. Not sure what the question is for courier services, but does anybody have any questions for any of the slides that were up? You could put it in the chat now. Okay, we have a question. Are sole custody accounts going away? Would a panelist like to answer the question?
So as far as sole custody accounts go, they kind of fall into a couple different categories. Any sole custody account that is created statutorily obviously will never go anywhere. It's in law. It has to be created and function as it's written in law. The other bucket of sole custody accounts are generally more for revenue collection. So those are the ones that, we would kind of be looking at on a case-by-case basis, whether or not using a particular bank account simply for the convenience of it is really the best practice going forward. So generally speaking, it's kind of hard to answer across the board. It would probably depend on what your specific bank account is and what it's used for and whether there's a mechanism within SFS to essentially do it better. One example that we had recently, one particular agency had a bank account that they were literally transferring money out of SFS into to make a payment out of a sole custody bank account. So we closed the bank account down and they're now just doing the voucher directly out of SFS. So there's issues like that. There's other issues where perhaps it's just used for money collection and those monies may be able to be deposited directly in the general checking instead of having kind of that middle pass-through. So without knowing exactly what account you're talking about, I can't really speak to your individual need or question, but that's just kind of the overarching concept of the project that Christine was talking about in her presentation.
Okay, so thank you, Chris. We have another question. Can you explain any petty cash payments that should be done in SFS instead and give examples?
I can field it. So for any of us legacy people that worked in the old system over 9 years ago, you may recall that small dollar purchases were encouraged to be done through petty cash advances. However, going into SFS and current banking technology, most payments, almost all payments, can be made in 2 days. So there was a time when it took us a long time to get a payment out of the state. But now all payments are really paid within 2 days unless it's selected for audit. So things like small dollar purchases should really be going through SFS now as actual voucher payments and you would no longer really need a separate bank account that you have to reconcile and deal with separately, and then do replenishment vouchers and that kind of thing. Specifically, a lot of agencies, I think the P card, a procurement card, is actually encouraged for small dollar purchases. So if you're buying office supplies and things like that, really use that P card credit card through the OGS system, and I think it's OGS. That would be a better use of SFS to make those purchases rather than using a petty cash.
Okay, thank you, Melody. Okay, we have another question. Does OSC set the permissions on online bank accounts?
This is Alyssa Mumford. I can handle this one. We do. If you have a request for any access to a certain bank, it's that banking services at osc.ny.gov. But you do need to let us know what you need access to and what the bank accounts are, but we are the ones who would set that up for you and give you your login information.
So we do have a follow-up to Melody's response for the petty cash. So the question is, the only payments using petty cash should be 1, under $250 per GFO, and 2, immediate need and vendor does not take P card, that they cannot wait for a PO and or a payment, etc. Correct?
Yeah, I think, again, this is Melody Getz. I think the GFO is giving some latitude there, especially for a vendor who does not take a P card transaction. But the under 250, there really isn't a dollar limit on anything. While the GFO allows up $250, there's probably in our near future a point where the dollar amount just really doesn't matter at all. And all voucher payments all payments can be made through the voucher system and paid within 2 days. Generally, I would say waiting for a PO or a payment. I'm not sure what a cannot wait for a PO and or a payment, when that situation exists, because we can make a payment in 2 days, whether you have the PO or not. So while those I think are in the GFO, I think they're probably more transitional. As we move forward, you'll probably see less and less of these reasons being permitted. So I'm reading that response. So what I mean is the item that is needed at the agency facility is needed immediately, and the vendor will not give it to the purchaser without the money first. So that's a little out of my league. I can say that my understanding is that the state never pays for anything they don't have first, but we'll put COVID in a different bucket. So it's a little unusual for me to see that, but that's because I'm in the accounting field, that I'm not in the purchasing field, so I'm not fully, I don't know that I'm the one that should be answering. I don't think there's anybody on our panel who can be able to answer that fully, but I think we'd have to talk to our finance group and just see, what they do, or maybe we can talk about that offline. I think that's from Sherry. Okay. It might be a unique case is what I'm saying, but I don't know. I'll find out.
Any other questions? We still have some time, so feel free to enter it in the chat.
There's one here that someone sent to the host privately. It says, are there some general risks in cash management that agency internal audit department should be focusing on?
So I think the question is, without seeing it, the question was, is there specific internal controls that agencies should be focusing on that manage their own bank accounts? Is that correct? You read that question.
Yeah, general risks that agency internal audit department should be focusing on, yes.
Well, so that's probably more a question for our state expenditures group, but I will say just from, because they do the audits and things, but I would say, just general management that accounts should always be reconciled. They're required to be reconciled monthly. Every bank account's required to be reported to the state treasurer every month for posting in the state register. Obviously for that risk to make sure that that state money is secure and set aside or constantly monitored, spent on the proper things. Those replenishment vouchers are for things that were supposed to be purchased, that there are separation of duties and approvals when something is paid, that somebody else is approving that payment and somebody isn't just putting it in and reconciling the account, for instance, without separate approvals. Security-wise, anybody who has access to those online accounts, like Alyssa answered earlier, as people move, and we know that there's a lot of turnover everywhere, so as people leave, those should be reported so that their access can be taken away, so you don't keep that risk. A lot of things are online today, so you want to be careful of that. Most things need tokens and things like that, so you want to make sure that the agencies are properly accounting for those tokens and getting them back just like ID badges. And then also, obviously, where you can, reducing the need to deal with cash, if you can. Cash is probably the biggest risk you have in any bank account. So for, if you can find ways to, reach out to us or to Treasury, find out how you can have money deposited without dealing with cash, if there are certain ways or certain improvements that can be made, that would probably be helpful too. It's just what comes to mind.
So another question that's come in is, how much money do you anticipate saving by closing in bank fees, staff times, etc., the unnecessary sole custody accounts?
This is Chris Smith again. I think it's too hard to pinpoint an exact number because there's so many different levels of services and different fee structures on so many of the hundreds and thousands of bank accounts. I would literally just be throwing a dart in the dark.
I think it's safe to say, though, that the savings would be pretty exponential considering how much daily monitoring either by OSC or by the agencies that have to do with all the individual bank accounts.
Another question that was asked, does CMU routinely monitor the float balance of the state's bank accounts?
This is Alyssa Mumford again. Amanda, you might have to check me on this one, but I believe that we do not monitor the float balances. We only monitor accounts that we sweep every single day, and usually if there is a float balance, that is reflected in our available balances, so that is where those would come in, but I don't believe we routinely monitor the specific float balances of all of the state's accounts.
Yes, I would agree with you, Alyssa. Okay, so those are the questions that have come in through the chat. So I guess this will end the presentation. If you have any questions, you can always reach out to us through the cash management email box or banking services or any of the email addresses that were posted before on the slides. If you have any questions after this presentation. So I thank you all for joining.